Every tax return you have ever filed went through a machine before a single human being looked at it. That machine assigned your return a score, a number that measures how likely your return is to contain something worth investigating. The higher the score, the more likely an IRS agent pulls your file from the pile and starts reading. You will never be told what your score is. Your accountant cannot access it. The IRS does not publish the formula. The only way you find out your score was high is when a letter arrives. That system is called the Discriminant Function System. It runs on every return. All 160 million individual returns filed in 2024. Every single one received a score. And the score was calculated before any human being decided whether your return deserved a closer look. Most Americans believe audits are random. They are not. They are mathematical. Your return is compared against millions of similar returns. Same income, same filing status, same deductions. The machine identifies the returns that deviate most from what someone in your exact situation typically reports, the outliers. And the outliers get reviewed. Here is what makes you an outlier. Not fraud, not errors. Legal deductions you are entitled to claim. You work from home. You have a dedicated space, a room, a corner, a desk that exists for one purpose. The home office deduction is yours. You claim it, and the machine flags your return. Not because you were wrong, but because the home office deduction is one of the most audited items in the American tax system. The IRS has documented through decades of examinations that most people who claim it don't qualify, not because they're dishonest, but because the rules are specific in ways nobody explains before you sign the return. The space must be used exclusively for business, not mostly, not primarily, exclusively. If that room has a bed in it, it doesn't qualify. If that desk is in a living room where other things happen, it doesn't qualify. You claimed it in good faith. The machine doesn't know that. It only knows your return looks different from the norm. You gave to charity this year, more than you have before, more than feels average. And the machine knows exactly what average looks like for someone with your income, because it has 300 million tax returns worth of data to compare you against. Your contribution exceeded the statistical norm for your bracket. Your score went up. You did nothing wrong. You were generous. But generosity made you an outlier, and outliers get reviewed. You are self-employed. You filed a Schedule C. You claimed legitimate business expenses, travel, equipment, a home office, meals with clients. The IRS estimates that self-employed Americans represent the single largest source of the tax gap, the difference between what is owed and what is actually collected. Your Schedule C is read more carefully than any W-2 employee's return. Every line is compared against industry norms. Every expense ratio is measured against what someone in your business typically reports. If your numbers fall outside those norms, and the norms are never shown to you, your score goes up. Now here's what this costs you. Not if you cheated. If you were right. A basic audit where a professional handles all IRS communication runs $2,000 to $3,000. An office audit, more detailed, more documentation, runs $3,000 to $6,000. A field audit, where an agent reviews your records in depth, starts at $5,000 and can exceed $10,000. 78% of all audits are resolved by mail. Most result in no change to the return. No additional taxes owed. The deduction was legitimate. The documentation held up. But you still paid $2,000 to $3,000 to prove it. You claimed a legal deduction. A machine scored your return as unusual. A letter arrived. And you spent thousands of dollars proving to the government that you did exactly what the law said you were allowed to do. The IRS did not reimburse that cost. The IRS did not apologize for the inconvenience. The IRS collected its documentation, closed the file, and moved on. Think about why the formula is secret. Think about why the score, a number that determines whether your financial life gets examined, is never shown to the person whose return it describes. Think about who benefits from you not knowing which legal deductions make you an outlier. Here is what changes everything. The defense is not avoiding legal deductions. You are entitled to every deduction on that return, and you should claim every one of them. The defense is documentation, and one $50 decision made at the moment you file. When you file with TurboTax, H&R Block, or any major tax software, you are offered an add-on called Audit Defense or Audit Protection. It costs approximately $50. What it buys is this. If the machine flags your return and a letter arrives, a licensed tax professional handles every communication with the IRS on your behalf. The $2,000 to $3,000 accounting bill disappears. The $50 already covered it. That is the only insurance policy that guarantees when the machine flags you, you do not pay thousands to prove you were right. Beyond that, keep your receipts and write the business purpose down at the moment of the expense, not in March when you are reconstructing the year from memory. Get written acknowledgement from every charity for donations above $250. For non-cash donations above $500, file IRS Form 8283. An IRS agent cannot dispute documentation that already exists. They can only question documentation that doesn't. The machine scored your return before anyone read it. It compared you to millions of people without telling you the result. It flagged you as an outlier based on deductions you were legally entitled to claim. And it did all of this in silence. The machine was designed to make you pay for being different. Keep your receipts. Pay the $50. Let the machine flag you. When the letter arrives, the investigation is already covered.